Hello everyone, it's Travis Jacobs here to talk to you about the 2020 and 2021 housing market crash. With stocks being at their all-time highs again and real estate getting in the bidding wars, we have low interest rates, the Fed is nonstop printing with their $7 trillion balance sheet. We're not seeing a slowdown in the housing market yet to justify this crash. However, we may see slow depreciation in high density areas, and all these people are moving into lower densely populated areas or just smaller cities in general. With the Fed buying up everything and inflating asset prices, we might not see this depreciation trend to end anytime soon. I would give it maybe 1 to 3 years at most. So these transitions of highly densely populated areas moving to other areas across the country that are lower densely populated or just have less taxes in general, they're moving to places like Boise, Idaho, Las Vegas, Nevada, Texas, and many parts of Florida. Some of the lowest fixed interest rates we have ever seen are causing an enormous amount of refinances. So these interest rate drops are due to the Fed battling against deflation and velocity in the M2 money supply. The Fed has little room left for interest rates now, and the rates should remain low for the foreseeable future. So since 1980, you can see the interest rates have dropped ever since. There has been no real uptick that has been really noticeable compared at least to the 1980 recession. And we can see this continuing trend to keep going down because the Fed is trying to avoid deflation with all their might, and it's really difficult to do. Their balance sheet is growing to 7 trillion, and it's probably not going to stop for the foreseeable future. So interest rates should remain low for years to come. And that may give us some oomph to the housing market boom, but we'll probably see a slowdown in depreciation coming up in these short years. So according to our GDP numbers, we are actually in a recession and have been in a recession for about 2 to 3 months now. GDP decreased over 2 months, putting us into a textbook recession, and this is very similar to most countries today, such as Japan, the UK, Australia, New Zealand, and countless others. I mean, we're in a world recession right now, and some even call it an economic reset. And this will have an extreme effect on the housing market, but we might not see that for maybe 3 years to come. So in this chart, you can see the Fed's balance sheet has gone up to $7 trillion, and there's almost no end in sight here. Even in one of the meetings the Fed had, they said they had infinite money to support the economy in economic downturns or unhappy times, if you want to call it that. And something that most people aren't talking about is the TGA, which is the Treasury General Account, and they have the ammunition to pump into the economy, which will put dollars into the economy that shouldn't really be there because that's printing money, obviously, and that'll cause consumer prices probably to go up a little bit and somewhat of an inflationary environment. So the Fed will do almost anything to stop the recession this time. It is much worse than the last recession, but there's also more stimulus in this recession, but that is needed because of unemployment and everything that's going on right now. So this is debatable on what this will do because we never seen such high numbers in history. So with the Treasury General Account, that is their ammunition to directly put in dollars into the economy to stimulate it and pump velocity for the M2 money supply, which may save the economy from the recession in the short term, but one day we will have to pay this price. And will it be in 2021? We'll have to wait and see. So as you can see here, real potential gross domestic product and real gross domestic product. And you can see the orange line, that is the real gross domestic product. That's shooting down because obviously everyone's unemployed, no one's productive, which puts us into a recession. So the first and second quarter, we have seen that. The third quarter will probably put us in recession as well. The fourth quarter is debatable, and that will reflect into the housing market economy a little bit with depreciation in some areas, and in some areas we're even seeing appreciation. So it's really up in the air of what's going on. So if you're looking to buy real estate or sell real estate, selling may be a good option. Remember, this is not investment advice. I'm just a YouTube guy, and I would hold off to buy right now because we really don't know what's going to happen, but we can have an idea and have probabilities play into effect here. Savings in the U.S. household have increased, but so has debt. Since the U.S. has turned into a debtor nation, households have become reliant on debt, causing lasting issues. As you can see in this chart, household debt cannot keep up with the GDP numbers, or GDP can't keep up with the household debt. Either way you look at it, it's not looking very good long term. At some point, we are going to have to pay the price for this and pay it off, right? So with stock market returning to all-time highs, US debt has increased to all-time highs, GDP is slowing down, putting us into a recession. I can see why people think there's going to be a real estate market crash in the near future. And given all this information, I still say 2 to 3 years. Real estate happens slowly, not fast. And moving on to the personal savings graph, we have personal savings hitting an historic high of around 33%. But as the economy is opening back up in each state, many people are traveling around, spending money, visiting on where they want to move to. Some are unemployed, so obviously they want to travel and experience things. But this is causing a short span of velocity in the money supply, which may change things a little bit, but GDP is still low and we are still in recession. So should you buy now, wait, or just let things play out and then decide? I think letting things play out and then decide on what to do is probably the best bet right now. If you're a real estate investor, holding off until you find a really great deal, maybe pull the trigger there. If you can't, then I would wait. 2021 is probably going to look pretty good to invest in real estate, but it might take a while for the stock market to finally crash, real estate market to finally crash, because real estate market takes a while. It takes years for it to dip down, reach its bottoms. So we're going to be waiting a while. Remember, this is not financial advice. I am some guy on YouTube who is talking about his opinions on the housing market. So with that said, it really depends on the market and how people react to the stock market when it falls, because let's get real, these stocks are highly overvalued and they are bound to drop anytime now. With low interest rates, refinances, and people moving abroad to these lower density populations and suburbs, we won't see a housing market crash for maybe 1 to 3 years at most. Eventually it will have to come down to its median again. And when that happens, that will definitely be time to buy. There have been talks of not having a second stimulus check, which may cause some issues in the short term and possibly the long term. But I don't think it's going to affect the housing market in the meantime. Remember, real estate is local, so it really depends on your market, where you're at, what's going on in it. So if you're in like a highly densely populated area, it may be a good time to consider your options as to what you're going to do with that property. So with all the refinancing going on, the low interest rates, people moving abroad back and forth, you're really going to see a lot of fluctuations in the market this year and next year. So it's going to be really interesting to watch, but I really don't expect the housing market to crash within 1 to 2 years. It's just not going to happen. We are going to see some people get evicted, and I've seen a lot of stories that are over exaggerating about this. It's shouldn't be nothing to worry about. Of course, that's what they always say, right? But really, I'm not worried. I am an investor myself, and I'm doing a live and flip right now, actually. So I really wouldn't worry. So thanks for watching, guys. Please remember to like this video and give it a thumbs up. And please remember to subscribe and hit the notification bell. And leave a comment down below if you agree or disagree. Think the housing market is going to crash this year or next year. Maybe it will, maybe it won't. Thanks for watching again, and I'll see you next week.